What you think you have is economic exposure. What you actually have is counterparty risk. Folks are potentially in for an unpleasant surprise. This is all assuming that through these layers of opacity, through these SPVs, that at the bottom layer, at the end of that rainbow, there actually is a pot of SpaceX, right? Because it might not be.
This is Matt Pauker with Wendy Lee. We're co-founders at Ivy Invest, and welcome to this week's episode of The Investment Office. Every week here on The Investment Office, we cover the latest in capital markets, alternative investments, and retail investing. This week, we would be remiss if we were not talking about what has probably been one of the biggest pieces of news in private markets in many months, which, of course, is the confidential IPO filing by SpaceX. It has been rumored for months that SpaceX would be filing to go public. We don't know the exact details yet of the IPO, given that it was a confidential filing, but there have been a lot of numbers circling around, some estimating that it would go out with a valuation of as much as $1.75 trillion, which would be wild. It would make it immediately one of the most valuable public companies in the world, and also rumors that they would be raising as much as $75 billion in this IPO, which would make it, I believe, perhaps the largest IPO in history. So first, before we get into some of the more interesting private market nuances of this, Wendy, just curious your top-line reaction on this news.
I think it's just reflective of how much the pathway to an IPO has changed for some of the fastest growing companies without having been able to raise so much capital in private markets, that they've been able to stay private. And we've talked about this, where they are now reaching enormous valuations and testing the public markets at valuations that immediately put them into the category of among the largest publicly listed companies that are out there, assuming, again, that SpaceX does IPO at the market valuation that we're talking about here. So raising an enormous amount from the public markets at IPO, and then having a market cap immediately that puts it into among the largest publicly traded companies in the world. It's wild what it has been able to achieve in the private market prior to it going public, assuming, of course, here that this public listing does occur in the near future.
Yeah, and I mean, for years, Elon Musk, of course, said that he had no interest in taking it public, that he expected to just grow it continually in the private markets. That obviously changed. I'm sure there are a lot of factors that go into it, and certainly part of it, obviously, is just the amount of money that he's attempting to raise here. I mean, they've been able to raise, obviously, billions and billions and billions of dollars in the private markets, but raising $75 billion is another thing altogether. And I'm sure part of that is obviously a desire to continue to grow SpaceX, but now also that XAI has been roped in, and we've talked about all the capital requirements, needed for these AI companies. I'm sure that is probably factoring in here to the desire to take it public.
I'm sure there's also, in no small part, it has to do with a recognition that early investors do need some degree of liquidity at some point in time, right? So folks can be patient for a very long period of time, and there's certainly been secondary market transactions in SpaceX, but to provide a source of liquidity that is a sort of ultimate source of liquidity, I think had to happen at some point.
That's right. And actually, I'll cue off what you just said about secondary transactions, because I think that one of the other really interesting pieces I read this week was a Reuters article talking about something we've talked about previously a few times here, which is the fact that there are a lot of retail investors who have been able to get exposure to SpaceX over the last number of years, not directly, of course, because the company's not been public, but through these SPVs, these special purpose vehicles. And we've talked about those a number of times, but I thought this article was really interesting. And before I get there, I will, just in full disclosure, mention that I, in fact, invested in SpaceX over 8 years ago now, in 2018, through one of these SPVs. And we can certainly talk a bit more about what that experience was like. But in this article, they highlighted, I think, a concern that we've talked about before, which is often there are folks investing or they believe they're investing into these companies through these SPVs, but perhaps often it's not really clear what you own.
Well, I think it's about to become clear, right? It's about to become very clear once SpaceX does IPO, whether or not the folks who think they might own shares or think they might have exposure through these SPVs, whether they actually do have exposure, whether they actually do own shares. And I think the article you're referring to, I read that as well. I think there are going to be some folks who are going to be very unpleasantly surprised because the nature of these SPVs is that the ownership structure becomes very cloudy and unclear in the sense that it is a vehicle that is pooling together capital, supposedly, certainly for the multi-layered SPVs, which I think are, just to be clear, what we're referring to here is primarily problematic, where there are SPVs investing in other SPVs and perhaps even then investing into other SPVs that are then saying they actually have access to secondary shares of SpaceX. And so once you get to these multi-layered SPVs, you're taking a risk and you're taking a leap of faith that the SPV that you're investing into actually then is investing along the ownership chain into something that ultimately has a claim on SpaceX shares. And that's a lot of various leaps of faith, but that's even before we get into assuming that these are legitimate SPVs that do, through the various layers, retain some actual ownership. There's a question then of the additional layers of fees that are being piled on and how that eats away at the eventual returns. And the whole purpose of investing is to generate returns, not just to own something that you can talk about at a cocktail party, presumably. And so if the premise here is that you're investing for outsized returns, even assuming that you're not investing into something that is illegitimate or a scam, which is right, very possible with these multi-layer SPVs where things are very muddied. Assuming that you actually do have your hands through these layers on something that is legitimate, there are so many excess fees that are being paid out to these SPVs that at the end of it, what are you even left with from a return standpoint, right? And so I think it'll be very telling when the IPO does occur and folks are through the lockup. I think there very, very well could be a subset of investors that finds themselves holding not much.
Well, and it's wild. I mean, to your first point, I mean, there's this amazing quote in this Reuters piece from this gentleman who was a former Google executive, then started a company in the space business. And he says, I invested, like, I hope it's there when it shows up. Like, I don't know. And this is a guy who is presumably pretty sophisticated, and even he has really no idea what he owes. And then to your point, I think, it's probably worth drawing out a little to explain how these SPVs are often structured, right, from a fee perspective, in that, often, and I see a lot of SPVs come across my desk, and there'll be a wide variety of different fee structures, but there will be typically three potential fees you see in these SPVs. Some will have, in fact, kind of one-time upfront fees where the sponsor of the SPV is taking something off the top. Some will then have ongoing annual management fees, 1 or 2%, where they are taking, that 1%, let's say, for as long as the SPV exists until the IPO happens and the lockup is over. And then they will typically have some kind of performance or carry fee where the SPV sponsor then gets some percentage of presumably the increase in value, the profits that occur when the lockup ends. And so to your point, right, if you were in a 3 or 4 layer SPV and you start to add up obviously just the sales loads up front, but then 1 or 2% a year plus another, often these carry fees will be as high as 10 or 20% of the profits. Depending on what price you bought at and what price the stock sits at post lockup, which of course, to your point, could be 6 months, or I've read news reports the lockups could be even longer for certain shareholders. You could easily imagine somebody not having made very much money for what might end up being a pretty long hold time.
Yeah. And again, this is all assuming that through these layers of opacity, through these SPVs, that at the bottom layer, at the end of that rainbow, there actually is a pot of SpaceX, right? Because it might not be.
It might not be. And what's interesting here, and I don't know if this will end up being a thing with SpaceX, depending on how, I mean, there have been probably thousands of SPVs at this point, and they're all structured very differently. But one of the things we've actually seen with other types of private companies, there have been these SPVs that were structured not around actual ownership of stock, but around contracts, often these kind of forward contracts that say, well, when the company does have a liquidity event, an IPO or an acquisition, then this SPV has the right to certain shares down the road. And I think there's a lot of open question as to how those forward contracts will be enforced and lawsuits that may proceed from that. Because again, you might believe you have what folks would perhaps refer to as economic exposure to the underlying thing. But what you have is a contract that the company didn't sign up to, and who knows how that gets enforced. So that'll be really interesting as well.
Yeah, that's exactly right. The way you described it is what you think you have is economic exposure. What you actually have is counterparty risk, right? So there's a lot there to explore as well. And that I think, again, folks are potentially in for an unpleasant surprise. But I think, there's a lot to be said here. And I actually, if you're open to it, I'd love to ask you about your SpaceX exposure. You invested over 8 years ago now at this point, and it was a very different company, and it was a very different calculus that you were making. I think it'd be interesting and perhaps serve as a sort of counterexample to a lot of the types of frenzy and SPV that folks are hearing about for folks who are trying to get into SpaceX today, to look at what it was like for you 8 years ago. How did the investment come across your desk? What were your considerations at the time? And going into it, just so that folks have sort of, again, a level setting of what does it actually mean to invest in a company as an individual investment and to take on that risk, because it's not something that we necessarily do here at Ivy Invest, and it's not necessarily something that we would recommend, right, from a portfolio standpoint for the average investor, but certainly it was a choice that you made at the time. And so I think it'd be really interesting to hear a little bit more about it.
Yeah, and I think it's perhaps a very Silicon Valley story in that I was meeting with a venture capital partner about something totally unrelated. And at the end of the meeting, he happened to mention, oh, we have this SPV we're putting together for SpaceX if you're interested. And this is an individual who had like a direct affiliation with the business. And so certainly there were none of those concerns that we've talked about on my part before, that there was an actual exposure here. I knew the individual, I knew his relationship with the company. And so, I think that perhaps is worth pointing out, just because it is, I think, very different than how a lot of folks today might be seeing, quote, exposure to SpaceX, which might be through some wealth manager or, through some broker dealer, where, there may be no relationship really between that individual and the company, right? Like in this case, I knew who the person was. I knew the relationship with the company. I had total confidence there. But to your point, this is 2018. Starlink had not yet been launched, right? And Starlink now has become the major revenue driver for the business, and I think is seen by a lot of folks as the growth engine for the business over the next period. Starlink had not launched, and the premise for the valuation at the time, and so the company had just gone out and raised a primary round of capital, and this SPV was kind of following on to that. The premise for that round, as it was explained to me, was Starlink was going to work and it would be huge, and I think that thesis obviously turned out, at least so far, to be certainly Starlink worked, and they've seen great revenue growth. But back to your question, in my mind, this was very clearly a venture investment, right? Like I want to be clear. Whereas I think a lot of folks today might be looking at these late stage SPVs as ways to supplement what they're doing in the public markets and saying, well, there are these very late stage companies that, at the valuations they're at, would be public companies, or would be S&P 500 members if they were public. And they're saying, well, here's some additional exposure. I did not look at it that way, right? This to me was a venture investment. The day I wrote that check, I expected to go to zero, which is how I think about all venture investments, right? I obviously hope that that that's not true. Uh,
Individual, just to clarify, individual investments in early stage startup companies, not ideally, not investments in venture firms
yes,
or
yes,
not
absolutely.
right, not in venture funds.
A venture fund that goes to zero would not be a venture fund for much longer, I guess. So yeah, absolutely true. I'm speaking here certainly to investments in individual startups, right? Or I don't know, you probably couldn't call SpaceX a startup in 2018, but certainly individual private firms of this nature. And so yeah, when I wrote that check, I assumed I would never see that money again. And I think that perhaps is different than how a lot of folks might be thinking about these SPVs these days. And again, it's been 8 years. By the time the company goes public, lockups end, it'll probably be 9 at least before I get some potential liquidity out of this investment. So certainly the hold time here has been significant. And every year I'm writing, a management fee check to the SPV sponsor. And again, that's just, money out of pocket with the hopes that one day you see something. And so uh, I do think that my experience here in terms of seeing the deal is probably different than a lot of folks, just given where I sit and the networks that I've developed here in Silicon Valley over, 25 plus years. But the experience post writing the check has been pretty consistent, right? You write the check and you cross your fingers.
And despite where you sit, despite the connectivity that you have, what was the level of detailed information you received on this
Oh, almost
SPV and this
nothing.
investment, right?
Like almost nothing. Uh, you know, I was told they were going to launch some satellites into space, and the company is going to be great. And then, after I wrote the check, I get quarterly capital account statements, so I had some visibility into at least how the SPV manager was valuing the shares that we owned. But actually, until very recently, I didn't actually even have specific visibility into the types of shares that were owned by this SPV. Again, I had confidence that there were shares, and both because of the way the partnership, the SPV agreements were written, and because of who the principal was. But for 7+ years, I had no actual visibility into the specific nature of the shares sitting underneath of this.
And again, this is like a best case scenario, right? Where you know the person, you have confidence that you're investing in what you believe you're investing in. And I do think it's worth pointing out that you are not the average investor by any means because of where you sat for 25 years and you've been building companies inside of Silicon Valley and for 25 years. And so your network and connectivity and the deal flow that you see just looks very different from anyone else who might be interested in investing in startup companies. Obviously, this one worked out, but
Oh,
it's
there's lots
taken.
that don't, right? Like, let's be clear, right? Again, there's a reason that whenever I make, to your point, an individual startup investment, like I assume it's going to be zero because, as an individual investor, again, it looks different if you're writing checks on behalf of a firm, and there's a level of diligence that's going to come as part of that when you're a professional investor. But as an individual angel investor, you rarely get access to the type of data that would allow you to do the level of diligence that would give you confidence that, beyond it's probably going to be a zero.
Even so, I just feel like this is such like an interesting example, like of your specific experience in this. It's just going to look so different from the later investors who want access to this specific company versus for you, it was a lot more about here's a person that you have known, here's a person that you trust. And in some ways, that is more akin to underwriting a manager versus an individual company, where again, it is very much based on the person, based on the trust that you have in this person, based on the trust that you have and what this person is telling you about the underlying investment that you're making together, right? So I imagine so much of this was not based on specifically it was SpaceX that you wanted access to. It was as much based on the diligence that you were doing on this person and your confidence in their assessment of an investment they were bringing to you.
I think that's a great point. If they could have brought me probably a wide variety of opportunities at that point. And knowing who this person was, their track record, if they had expressed the same level of conviction in another business, I probably would have been equally interested. Because again, if we think back to 2018, right? Not only was SpaceX not what it was today, but I think there was Elon was not who Elon is today in the sense of I don't think there was an appreciation at the time for his ability to drive retail investor interest that we now see. And I was actually reading, thinking back, to our last episode where you interviewed Carson Block from Muddy Waters. I was reading a great investor memo that he had published a couple years ago, and one of the things he talks about in there is how he would never short Elon. And it had nothing to do with whether he believed in the company or not. It was simply that he had such an appreciation for Elon's ability to raise capital, and that Carson really grew to appreciate how that could be such a competitive differentiator
Mm-hmm.
for an
Yeah.
operator, right?
Mm-hmm.
That you can make great cars, you can make not great cars. That can pale in comparison to just the ability to raise capital. And certainly Elon has proven his ability to go raise capital time and time again. But again, in 2018, I don't think that was appreciated, at least certainly by me. I did not appreciate it to the extent that I now see how that can be a competitive advantage.
Yeah. And I don't think you were alone. I don't think there was broad recognition in 2018 of how influential Elon would be, how influential his companies would be, how successful he would be in raising capital and in raising investor interest across his businesses, because that is a competitive advantage, right? And I say this because I can think specifically of certain VC funds that have been enormously successful in part because they would invest in anything that he would do. There's one in particular I'm thinking of. And that fund at the time, they've now become a household name, now have seen enormous success, would be considered one of the top tier funds that's hard to access. But at the time, they were having trouble raising capital. Like, I remember talking to them and I remember looking into their portfolio, and their biggest bets were on some of Elon's companies.
It has been remarkable, certainly for me, just again sitting here for over a quarter century now. I'm old. Just to see again the level of success that he's been able to drive in fundraising. No
Mm-hmm.
no one else comes close. And we saw it first, to your point, with a set of venture investors who were willing to continue to back him over and over again
Mm-hmm.
in times both good and bad. But then
Which
I
to be
think
then
obviously, oh, go ahead.
then to be clear, like they were also taking a bet. They were really taking a big bet on Elon. And to their credit, they saw the potential in a way that others didn't.
Totally. And now obviously he's been able to extend that kind of that capital raising ability beyond just the venture community now, right? And whether whether it's raising capital from sovereign wealth funds or from now I think retail investors, and he's talked about as part of this IPO having a much larger allocation than usual for retail investors, which I think certainly something we're both pro, right? I think for too long, the IPO, to the extent that there will be sometimes an IPO pop, that has often only been captured by well-connected investors who have a relationship with the spot, the underwriting bank.
Absolutely. Absolutely. It is just in so many different ways. SpaceX is this fascinating case study of a company that you had a personal connection to it far earlier than most. But it's going to, I think, just continue to be a really interesting story to follow as it comes on into the public markets and has to share with the public markets a lot of the under the hood financials and data that have to come online as a public company that as a private company you don't have to reveal.
Totally. And I think, it's going to be a really interesting question now because all of a sudden the SpaceX that's going public actually looks very different than the SpaceX of even 3 or 4 months ago, right? By rolling in XAI. In that merger, my understanding is XAI received, I think, about 20% of the business was kind of a valuation standpoint was XAI. And I was personally so negative on the merger, just from like a personal, like, what is this going to mean for like my own stake? But I have actually changed my view on this. And I think it was genius because I think Elon companies thrive from a investor interest standpoint with more ambiguity, not less. That's actually my theory.
Because then
the
you can have
more
more
ambiguity
hype.
there is,
Yeah,
the more you can tell yourself a story.
Opportunity for hype.
Yeah, and the more that an optimistic retail investor can tell themselves a story.
Yeah, that's fair.
About the future. And it is a classic, it's actually such a classic venture mindset. Right? In that, in a lot of ways, the easiest round most companies will ever raise in venture is their first round of financing. Because data is often not your friend. Right? Like once you have data, there's no perfect company. And there's always something that a somewhat skeptical investor there's always a reason you could find to not write the check.
Yeah.
And I think that's just natural, like, there's pessimistic investors and optimistic investors. And I think that optimistic investors in general do better in venture because I don't think it pays to be a pessimistic investor.
Yeah. What do you do? You're in the wrong asset class.
You're the wrong asset class. Right. But like I would assume that like psychology is true of retail investors, right? Like there are retail investors who are optimistic and there's retail investors who are pessimistic. And I think Elon has demonstrated there are just a lot of very optimistic retail investors. And it's neither right nor wrong. It is what it is, right? And so I actually think that rolling in XAI and X and Grok and like all this stuff that is incredibly speculative, I think there's a good chance that it, at least in the immediate term, it boosts the price.
I have no prognostications.
And prognosticating with respect to Elon, I think, is always a very dangerous game to play. So probably a good choice. Well, this was a fun discussion. It will be interesting, certainly, to see how the SpaceX story plays out from here. And I think also how that, of course, impacts some of the other potential planned IPOs or expected IPOs for the next period, whether we're looking at OpenAI or Anduril or Anthropic or some of these other massive late stage private companies that certainly I think would like to tap into the liquidity of the public markets and are probably waiting to see how SpaceX fares in their debut. Thanks for joining us this week on the Investment Office. We'll see you next time. The Investment Office is presented by Ivy Invest Corporation. Ivy Invest Corporation serves as the advisor for the Institutional Investment Strategy Fund, a closed-end interval fund. The fund is designed for long-term investments and is not intended as a complete investment program. An investment in the fund may not be suitable for you if you will need the money you invest within a specified time frame. Shares in the fund are illiquid and can be sold by shareholders only in the quarterly repurchase program of the fund, which allows for up to 5% of the fund's outstanding shares at NAV to be redeemed each quarter. Before investing, you should carefully consider the fund's investment objective, risks, charges, and expenses. This and other information is in the prospectus and summary prospectus, a copy of which may be obtained by visiting fund documents at ivyinvest.co. Please read the prospectus carefully before investing.